Hi, everybody. I'm Lex Sokolin with Consensys, and I'm going to talk about decentralized finance in 2021 and the changes that we see happening. So first, I just want to set the stage around what is the secular change in financial services? Financial services is a large part of the economy, about 20% of world GDP, so we're looking at trillions and trillions in revenue pools. And there's been a ton of innovation trying to make finance better. Has that really worked? So first, I'll just touch on what Fintech has done for financial services. And then we'll talk about decentralized finance and the programmable blockchains on which it is starting to grow up. And then we'll end on the core vectors of growth and what's really inside of the next year and kind of the next steps coming up. So first, just want to anchor in terms of fintech. We've had now over a decade and over 500 billion of venture capital investment into financial services innovation. And largely what that has done is digitized the distribution of existing financial product. So your asset classes, equities, fixed income, ETFs, banking, bank accounts, payments networks, they now have a digital footprint in terms of the consumer. And there's a little bit of digitization around enabling software, so middleware, account opening, CRM, financial planning, performance reporting, asset allocation, trading, rebalancing, for sure. But what we have not done is digitized the manufacturing, the how do you make a bank account or a deposit account? How do you make a brokerage account? That remains in the same world with the same type of underwriting, record keeping, and settlement as has been prior to this fintech boom. And that's where we at Consensys think that the next generation lies in the manufacturing of financial instruments on open source programmable blockchains. And if you look at every single transformative shift in the other industries, whether it's music with Spotify or transportation with Uber or information with Google or video with Netflix, they're cliches, but they're cliches for a reason in the sense that they were disruptive outcomes. And the change that happened is around manufacturing. You can't have a Spotify of CD-ROMs. You can't have a Google of paper books. You need the thing itself to become digital. And that is what is happening largely on programmable blockchains today. If we look at Ethereum, that is one of the largest ecosystems for taking financial instruments, whether they are a money, a USD equivalent, whether they're central bank issued, whether they are private monies within banking institutions, or other instruments within financial services like equities or bonds or money markets. And all of those machines that used to make those things are being turned into software and then put onto a programmable blockchain like Ethereum. There are other options, of course, as well that can do computation in a decentralized way. And so the jury's still out, but the majority of the ecosystem is using Ethereum for this purpose. And so I'm going to walk through some of the key top line statistics that in evaluating whether this is real or not, I think you should consider. There are now 130 million addresses for public Ethereum. There's also, of course, private permissioned Ethereum, Quorum or Hyperledger Besu, which institutions deploy to run supply chain consortia or capital markets consortia. But on mainnet, which is the public sort of adversarial Ethereum, is 130 million addresses today. About 1.2 million transactions per day. And so we're at a height of the system doing value exchange and also doing computation. We're at a height of calls per day, so smart contract calls per day, meaning the actual software that is written on Ethereum is executing. We have around $25 billion USD worth of stable coins. So they are largely denominated in USD, which has allowed this ecosystem to build its own financial machines. And there is increasing diversity in the type of stablecoins that live on Ethereum, from some more, I'd say, Wild West unregulated ones to algorithmic ones to ones that are backed by large regulated entities. And interestingly, there's now 100,000 Bitcoin, which is about $4 billion, structured, tokenized on Ethereum as well. So that is mostly in the form of WBTC, but there's RenBTC and a number of other providers that are taking Bitcoin and making it available inside of this new financial sector that's developing, right? Whereas Bitcoin is the value itself, or the commodity value itself with the payments capability. For Ethereum, it's a plethora, it's a whole network of different financial machines that are able to perform capital markets functions, saving functions, investment functions, and so on. Now, how many people are using decentralized finance, using this alternative financial system? And the largest estimate that we've come across is about 1.2 million cumulative DeFi asset holding addresses. So these are addresses that have held an asset that has been manufactured by a DeFi protocol, which is, if you think about the traditional financial ecosystem, a bank account or a brokerage account is manufactured by a licensed regulated company. And similarly here, you're looking at a protocol that is generating assets that are then held on the network itself. The total value of these assets are in the kind of $20 to $30 billion range. So if you think about 25 billion locked in protocols, that would mean that your loans are collateralized with about 25 billion worth of various financial instruments. You can add the stablecoin number to it, even though there is a little bit of an overlap between them, but that gives you an order of magnitude. And then similarly, in terms of market capitalization, DeFi protocols are now at around 20 to 30 billion for what they make as well. Now, there's an important distinction between the asset and the protocol. The protocol is the machine that makes the financial instrument, right? So if you want to issue the DAI stablecoin, you would interact with Maker. And so the DAI stablecoin versus the governance token of the protocol are very different things, and both create interesting developments. Again, one is about the machine that makes the thing, and the other one is about asset class exposure to the project, I would put it. These projects are now generating real fees. You can call it revenue, you can call it whatever you like, regardless. If you're interacting with these automated financial machines, there's now, some of them are annualizing at 500 million in revenue from automated market makers. Some are annualizing at 100 to 200 million in terms of projects like Compound or Aave, where you're looking at underwriting or collateralized lending, things of that nature. And so there's real economics now in this decentralized finance world. And those real economics are transforming into new types of financial instruments that look like investment funds, that look like the new version of PIMCO, essentially, except on-chain, which is really interesting to see the packaging and optimization of these composable instruments into something that is more consumable for a user that happens to be more retail or more naive and needs intermediation. Finally, if we start looking at the edges of what's happening in the market, crypto art, NFT art, non-fungible token art is starting to heat up. There's still less than 100 million in sales relative to 60 billion in turnover in the traditional art market. But I think we finally reached a moment where digital collectibles are things that digital entrepreneurs want to own and are proud to own and share on digital social networks. Certainly, COVID has accelerated the adoption of these secular themes, but it's a really exciting area for next year. with examples like the $3.5 million sale from the artist Beeple, who's got millions of folks following him on Instagram, or the 80,000 sale of the Little Michaela piece. We're seeing a real overlap between influencer communities and these new ecosystems. And then the regulated side of the world is also starting to touch DeFi in kind of transforming the security token theme into a regulated or private DeFi theme, as different protocols like Aave get institutional licenses to touch regulated assets, whether they're monies or securities. And finally, the central bank digital currency in China is here. It is now accepted at JD.com, which has the e-commerce volumes of Walmart. And so we expect to see pretty massive growth and distribution of virtual currencies in Asia, pioneered by the DCEP. That will really, I think, put pressure in terms of adoption on what is money within a crypto ecosystem and which way does it bend. And of course, you can tell many different types of stories around that. Finally, I want to highlight the core vectors of ecosystem growth that we see at Consensys. And we think all three of these have to happen for really a step change in adoption. And so that's user enablement, helping people access tools in commerce and digital economies within programmable blockchains. Second, it's developer enablement, and that is helping people build more and more economic projects and various things that users can interact with. And finally, it's financial enablement. And because these are financial systems, they're not just abstract computer sort of software systems, financial enablement and getting assets and value into this infrastructure and digitizing it is really important. And so from the Consensys point of view, our offering around MetaMask and MetaMask Institutional aligns to user enablement. And then for developers, we of course have Infura, on which you can spin up applications, Truffle, which can help you write the code, Consensys Quorum, which allows you to have an enterprise client for Ethereum, and Diligence, which is our smart contract audit arm. And then finally, for financial enablement, our Consensys Codify project allows you to do digital assets, payments, compliance, data analytics, and all the different modular pieces that you would need to set up a DeFi project. So again, users, developers, and financial assets are coming together on programmable blockchains. They're allowing the financial manufacturing of new asset classes, and they're digitizing traditional asset classes at the manufacturing layer. Thanks so much. I'm Lex. Check out consensys.net for more and reach out anytime.